morning everyone. So today we are going to discuss about topic 2, the accounting concept and accounting equation. Okay, shall we start now? Okay, come. So hopefully by end of this topic, all the students should be understand what is meaning of generally accepted accounting principle. Second, accounting concept, and the third one is accounting equation, and last, double entry system. So let us start with the generally accepted accounting principle. So generally accepted accounting principle refer to a common set of accounting principles, standard and procedure issued by the Financial Accounting Standard Board, or we refer as FASB, Financial Accounting Standard Board. So normally you see when we are doing accounting, right, all the financial accounting practice is governed by generally accepted accounting principle. And this principle can change over time to reflect changes in the business, environment, and demand of the user. Here again, let me tell you, if we have any different or the different opinion between the accountant, right, we can solve by referring to GAAP, Generally Accepted Accounting Principle. This GAAP, Generally Accepted Accounting Principle, cover convention, concept, regulation, procedure, and the guideline of the standard. So the main objective of the GAAP is to make information in the financial statement is relevant to the user, reliable for the user, and comparable in different entity. So this GAAP, right, we have altogether 12 concepts. All right, let me highlight again. We have altogether 12 concepts in this generally accepted accounting principle. Let me start with the first one, historical cost concept. Second, monetary measurements, followed by economy entity, going concern, consistency, accounting period, materiality, revenue recognitions, expense recognition, full disclosure, objectivity, and lastly is fair value measurements. So let us look at the first one, the historical cost concept. So what does it mean of the historical cost concept? So according to this concept, all the acquired assets and services should be recorded at the actual cost. Let me highlight, should be recorded at their actual cost. The cost, why we record at the actual cost? Because this cost is more reliable, okay, and can be approved and should continue reporting in the historical cost of an asset over its useful life. So let me give you one example. Let's say the company purchased a car from a supplier with a cost price of 20,000 at 21st of April 2020. The market value increased up to 25,000 on the next day. So what is the cost should be recorded by the company and why? So remember, according to this historical cost concept, the value should be recorded as 20,000. Why? Because this 20,000 is the cost that we acquire the asset. So as what I told you just now, all the asset that we acquire and the services that we acquire should be recorded at their actual cost. So because this cost is more reliable. Now let us go to the second concept, the monetary measurement concept. So according to this concept, money is the common denominator in businesses. So you have to remember, you see, whatever transaction and event in monetary is crucial to the use of financial statement for business communication. So this accounting generally assumes a stable monetary unit. Example of monetary units are the dollars in the United States, and of course in Malaysia we are using RM, Ringgit Malaysia. So example again, a transaction occurs in the organization but the value cannot be determined. So based on this monetary measurement concept, right, all the transactions must be recorded in the monetary unit concept and the value must not change with the inflation situation. We go to the following concept, that is economy entity concept. So what does this economy entity concept refer to? So according to this concept, the activity of the entity must be kept separated
and distinct from the activity of the owner and all of other economic entity such as owner of the entity, supplier and customer. The entity need to be evaluated separately and the transaction of different entities should not be accounted for together. So we have look at this for example. The company purchased a car for his wife by using money from the business operation. He had recorded the purchases as a business asset. Besides that, the expenses such as fuel oil was recorded as business expenses. Can we do that? So let me tell you. So based on this economic entity concept, right? The business are not supposed to or not supposed to record it as a asset. Why? So because this business does not follow the economic entity concept. The purchase of the car and all the related car expenses should be recorded in the business as drawing because the transaction was related to the owner and not to the business. The owner is considered as a separate entity from the business. Now let us go to another concept, going concern concept. According to this concept, the enterprise or business will continue in operation long enough to carry out its existing objective instead of being closed or sold. It means that the entity is assumed to be remain in operation for the foreseeable future. Most firm resources such as supplies, land, buildings, and equipment are acquired to be used by the business in its normal operation rather than sell them in the market. So it is reasonable to use historical costs for a going concern entity unless evidence suggests the business will be liquidated. So we have another example. The company purchased a car with a cost of Rm 20,000 with an estimate useful life for 10 years. The market value for the car is 25,000. So it is suggested that the car should be appreciated for 5 years because the business is expected to make a clearance in a short period. So can we do that? So based on this going concern concept, so this suggestion is rejected because it's contra with the going concern concept. So the vehicle should be recorded as a value of Rm 20,000 and must be depreciated for 10 years because the trade must be assumed to operate for a period that cannot be expected. Now we're going to look at the concept number 6, the consistency concept. What does it mean? Consistency means that a company uses the same accounting principle and method from year to year. So is it important? Consistency concept is very important because when financial information has been reported on a consistency basis, the financial statement permit meaningful analysis of trend between the company. In other words, we can compare the company performance from year to year. So let me give you one example. The company used straight line method in depreciating the fixed asset of the company. So now the company decide to change to declining balance method. Can they do that? So of course the answer is no, right? Okay, now let us look at the explanation. So why the company cannot do that? Because it does not follow the rules of the consistency concept. Because the method should be used from years to years. Any changes should be disclosed in the notes to the financial statement. So now let us look at another concept, that is revenue recognition concept. According to this concept, revenue is only recognized in the period they are earned. So when the merchandise has arrived to the buyer or when services are rendered, even cash receivable. And now we have all together 4 criteria to consider when we want to recognize the revenue. First, there is a change of ownership or title. And second, buyers are willing to pay. Third, the stability of the currency. And the last one, the buyers are able to pay. So look at this example. Alpha is an entrepreneur of pottery. He has received 100 reservations of porcelain vase on 1st of January 2020 and has received a payment of Rm 1,000. The booking was sent on January 15, 2020, when the sale above should be recognized, and give your opinion. And of course, you see, based on the explanation just now, we have to follow the 4 criteria, right? So Alpha need to recognize the sales revenue of Rm 1,000 on 15th of January 2020. Why? Because during that date, it's a change of ownership of the date. So remember the 4 criteria? There is a change of ownership. Now let us look at the full disclosure concept. Concept pendedahan penuh. So according to this concept, the company should report sufficient information that is relevant, reliable, comparable so that the user can make reasonable decision. So usually the disclosure are in notes to the financial statement. So every concept we give you one example. Look at this one. TCAM Enterprise have made changes in stock valuation method used. The company did not disclose the information in the financial statement for the accounting period. So based on this concept, right, the situation does not comply with the concept of full disclosure. Where a change is made, it should be reported in the notes to the accounts. The aim is to inform the user of changes in the financial statement. So now we look at the next concept, the accounting period concept. So time period covered by financial statement is known as accounting period. So time period assumption means business activity can be divided into specific period such as month, quarter and a year in order to enable comparison of business performance over time. So example, the company has established at 1st of January 2019. The trade closed the business accounts every 12 months at 31st of December every year. So explain the concept involved. And I think based on the example, right, it's a clear cut that is very normal condition when the trade follow the accounting period where the financial statement will be held every 12 months. Now we go into the second last concept, that is objectivity concept. Concept keobjektifan. So according to this concept, right, all the accounting data must have a valid evidence and reliable to support all the transaction occur. So the main objective or the goal is to prevent accountant in giving subjective and inaccurate opinion. So let's look at the example. Batam Indah Enterprise only issue a receipt for cash transaction. But for the returns of goods, right, sales transaction, no soft document is issued. So can they do that? So please give your opinion. So come again, based on the objectivity concept, right? The business does not comply with the concept of objectivity for the returns of good transaction. So bear in mind, according to this concept, right, all the transaction that occur should have source of document. So this document provides evidence and can facilitate the recording of transaction. Now we go for the last concept, that is fair value measurement concept. So according to MFRS, Malaysia Financial Reporting Standard, defined as a price that will be received to sell an asset or paid to transfer a liability in orderly transaction between market participants and the measurement dates. So the ideal determination of fair value is based on the price offered in an active market. So for this last concept, right, we don't have example. As what I told you, we have all together 12 concepts, right? So now I want you to go back to go through again one more time the concept, and please give me one example of this fair value measurement concept. Alright, so thank you so much. That's all about our concept. See you again in the next lecture. Bye, take care.
Let us take a short break. Here are some questions that you will need to answer. Accounting concept question. You are required to identify the accounting concepts which are involved and should be complied for each of the following situations. You are given 20 minutes to complete this task.